because everybody's talking about the debt ceiling. What exactly does it mean? What is it? And will it help assets? So this question is from me, not me, but me in the community. If when the US solves the debt ceiling, obviously the question was posted before last night, it was resolved. But is it good for stocks, bad for crypto, bad for stocks, good for crypto, bad for both, good for both, etc.? What exactly is the deal? Well, first of all, let's break it down, what it means and why it's actually good news. So the ingredients of the debt ceiling that took a long time to negotiate actually has some good information in it. Good for us. So well done, Mr. McCarthy. So they did, and it's not confirmed yet. It's kind of like another handshake agreement, but it will be raising about $4 trillion over 2 years. We'll dig into that. It'll roll back some non-defense discretionary spending. Federal spending will be capped at 1% annual growth for 6 years, but they're already spending a ton already. Defense spending, $900 billion, just shy of $1 trillion, which is less than the amount that they spend on interest. Full funding for medical care for veterans, good for them. Also increased age requirement for food stamp recipients seeking work eligibility. And retrieval of some COVID funds. Also cutting back some of the IRS investigator funds too, which is good. And no tax hikes, which is also very good. So a lot of goodness in there. But really, I want to focus on the $4 trillion and what that means. There's some hidden nuggets here which are kind of stunning. One, 2 more years of raising debt, $2 trillion a year, equals $2 trillion deficit a year. Because by my calculations, the US government would be running at a $2 trillion deficit. So raising it for 2 years for $4 trillion should cover that deficit. And of course, nothing else. So it's not like they're spending more. It's just they're digging themselves deeper into a hole, everybody. And this means that the government will issue bonds, i.e. print more money. Hello, Mr. Hammer. And this will eventually trickle down. And that will mean risk on. So there's one thing that is a little bit confusing. When they issue bonds, that sucks a little bit of money out of the system. But then the government spends that money and it trickles down. So there is a slight time lag between, issuing or raising the debt ceiling, issuing the debt, and then the money coming back into the economy. So just bear that in mind as well. Now, this is stunning from Zero Hedge. No budget caps after 2025 as part of the debt limit deal. Okay, interesting. Boom. It's like, as we say, to infinity and beyond. It's just, as we always said, we're in this debt spiral. There is no way out. It'll just continue printing as we go on and on and on and on and on. Anyway, what does $2 trillion a year mean? This is the most important part because this ties back to the ultimate question. So, in simple terms, debt in trillions is 31.4 trillion. There's about 290 trillion in unfunded liabilities. So call it 220 trillion in debt in total, but we don't talk about the other 190 trillion. That's a secret. So this extra 4 trillion in 2 years means 11.3% approximately loss in purchasing power over time. That means your currency will be debased. That means hard assets will rise, but it's very, very important to check on exactly what that is. If you look at a post I made on James LeVish's question yesterday on Twitter, it's fascinating. And it's been seen like 50,000 times. So that's worth checking out as well to get a feel for exactly what debasement means, because people get excited. Yeah, money's flying in. Purchasing power goes down. Your assets go up. But at the end of the day, it's really hard to catch up. But when you have an influx of another 4 trillion of money chasing the same amount of goods, prices go up, trigger inflation again. And that's just the nature of the beast. But there's no surprises here at all. So overall, debt ceiling was good. This will increase hard assets. And we immediately saw Bitcoin react yesterday in the market. And I do believe, next week in the stock markets could be pretty good as well.